Let's turn that off. Firstly, good evening to everybody. The whole point of this stream today is to have a look at a couple Indian equities. Many people aren't familiar with some of the biggest names in India, including myself. So this will be a bit of an introductory stream. To first of all look at the numbers. All figures used will be used in US dollars. The numbers of some of the biggest companies in India. Let's put up our list here. There we go. I could use multiple graphs, but I'll switch to one for now. Right. I haven't got the stream stuff up, but I'll do that and we'll shortly begin. Might as well post it on Twitter as well. And pop out the chat. The US session comes to a close in about 24 minutes. We have a couple of things of interest that we need to check just before we begin. Okay. The one of interest is Huya. There's not clarity on whether it is an add for today, add on strength to our initial position, or wait for some clarity in this wedge kind of area, and then that's where we would buy. I'm waiting for now, but I would like it around 1550 or so. Would be quite nice. Classic business that ticks all the boxes fundamentally. Ooh. Text coming through. Let's post this real quick. India's biggest names. That works. Well, Huya's... Oh, actually, that's not of interest. Let's stick to India for today. And we have our alerts there anyways. Just want to see what the stream is seeing. Should I move my head downwards? I will. Alright. We are going to support some financial data from a beloved Bloomberg terminal. See if we can find out a couple bits about these businesses. A totally new business to me. I don't know what Aurobindo Pharma do. I assume they're quite large. Roughly $6 billion is probably my estimation. Let's see. Quick little description. Aurobindo Pharma manufactures and markets oral and sterile antibiotics, antibacterials, and a ton more drugs. That basically says, as their name says, this is a pharmaceutical business. Let's look at the weekly. Pre-COVID, I'm assuming, is here. Alright, 611 rupees a share. It's now over 50% higher. And that is roughly around all-time highs. Indian markets have been taking a huge inflow. In fact, we'll look at the main ETF that is used. This is INDA. We'll go on the daily, and actually weekly is better. Around the time when COVID had begun, that was around 15th of February, thereabouts, 18th. Let's just use here, the 10th of February. That's the week beginning, I believe. That took it all the way down from $35.80 a share for that ETF that represents all of these companies on this list, all the way down to $20.66 a pop. Or I think that's dollars, yeah. Recovered, beat those highs, and now it's way higher. What are we talking? Probably 30% or so higher than its previous highs, and those are probably all-time highs as well. So there's something that has taken the attraction of investors into these Indian equities. That's something that we can be clear on now. And let's look at some of the biggest movers. So Aurora could be not the biggest mover, but it's one. Let's have a look at their financials, see if this is all based on smoke or are there actual details going on behind the scenes. Let's see. I'll switch it all to dollars at a constant rate. Revenue, 2018 revenue for these guys was about $2.5 billion. 2019, up about 18%, $2.75. Then 2020, same kind of growth, slowed down to the most recent year. But the accounting they use is a year forward. So their 2021 is actually 2020. Their 2020 is actually 2019. So really 2017 was 2.5 billion, not 2018. And 2018 was 2.75 billion. 2019 was 3.2 billion. So the most recent year, 2020, had slow growth, but still growth in terms of revenues. Profits as well had decent growth, actually. Faster than the past 3 years. That's good. Next year's expected growth is slowing down. I think a lot of the time when you have people investing in businesses, they tend to invest in those that can grow their revenues at significant rates. So say ARK is a popular investor right now. And in their ETF, whenever they add to a position, what they do is they tend to add to positions that they think can increase revenues at 30%. They call it the CAGR, the compound annual growth rate per year from a set period to 5 years' time, the current period to 5 years' time. They say minimum 30% is what they expect. So they started selling off a company called Huya that was based in China recently because they weren't expecting them to increase revenues at that rate anymore. In fact, I think it was 8% or something like that. With Aurobindo Pharma, these guys, it's a similar thing where their revenues are not growing that much. So are they a great investment prospect? For those who are simply buying an ETF, yes, there is some exposure that comes over. Fundamentally, they're not a growth stock, they're more so a value stock. And to see value breaking to these all-time highs, well, nearabouts, and potentially going higher, you'd probably think there's more interest in Indian growth plays as opposed to value plays such as this one. So if you like value in India, you play the right time in here, maybe you have a way you can win. Another one that could be an easy value stock as well is Tata Steel. That was in the news a while back. Let's see how things have looked financially. Let's see, Tata Steel Limited. We able to get some? Yeah, that's the right company. You always got to make sure you got the right ticker and the right company, because in India there are a lot of businesses that are subsidiaries that are also listed as well. So what we'll find is, I think, something later. It's called like ICICI Bank, and then it has Prudential, then it has another consultancy division or something like that, is what we could check out. Tata Steel. Clear to see that this has been a significant outperformer. In terms of its market cap, it's about what, $13 billion, should I say? If we look at market cap at the end of last quarter, well, now it's 1.3, almost 1.4 trillion rupees. It's roughly 107, I think, per dollar, if I'm not mistaken. In terms of revenues, their revenues have been roughly constant for the past 4 years. Suddenly they're expected to increase by about 25% in the coming year, then slow down the year after, In terms of profitability, that triples their profits, and still it comes down to double their normal level the year after, but it's still nothing amazing for this kind of company. There seems to be some form of rush in Indian equities right now. Not much has changed for these guys. Maybe just some interest has come from the international market. Let's see. Price earnings ratio right now is about 6.5 using 2020 earnings, or 2021 coming up, but 2022, as it says on their accounting. Not too bad. Historically, it's been about 9, between 9 and 13. So to be at 6 is cheap now, but this growth has to be kept up into the future. So I assume that the market has taken this quite positively, and you've seen, what, a 30-40% move in just 2 months or so. On the back of that, earnings must have been quite positive. Yep, so surprise, better than before. Now it's trying to cool off. This kind of company, though, has no issues with it. It's actually historically cheap, but was it valued incorrectly in the past is the question you bring on your mind. Will the growth be kept up into the future? We'd have to look into a couple more details. I assume from the name and what I've heard in the headlines before is that these guys they manufacture many different steel products. Anything from the tubes to these bearings to whatever. That's what Tata Steel do. Let me have a check that everything's still running. Can I hear myself there? Where do I get the chats from? Let's see. Alright. So what have we looked at? Aurora Pharmaceuticals, briefly. We're not looking at any charts in detail. We're just putting the charts up there for some graphics. We just want to see what these companies do, how they've been performing. Get a rough picture of what this market includes. Who are the main players? And how do those main players move is what we want to do over anything. Next one, coal. Coal India Limited. Let's see if I can pull up any financials. Oh, and there goes our terminal. Accidentally Control W'd. Let's reset. Okay. Coal India. How are they pre-COVID? 163, roughly the same right now. Kind of business that you'd assume gets bought up because there's a wider market recovery. But in reality, is this an industry you like to invest in? Probably not. But I want to have a look anyways. Maybe see how the industry has been doing as a whole. It would be something I would do on a lead to date. Just want to see how the company's doing first. Let's see, switch up dollars. Revenues flat, if not declining. This year they're expected to increase, and the year after. Profitability isn't as special as it was maybe last year, the year before. It's a good business though right now. Is it expensive? Let's see, 5. Yeah, it's a little bit expensive. Makes sense why it's not making all-time highs as well. For the state of the market right now. What else is there? we'll flip through a couple of these because I've got about 10 minutes or so. JSW Steel Limited. See, a steel business. There's a lot of materials in India, I'm assuming, or at least the businesses that take the raw materials and develop them. Revenues are expected to increase by over 50% versus the recent year and the coming year. You haven't had that growth in a while. Profitability is expected to double, and thus that explains why the shares have done so well in recent weeks. From April to now, wow, almost doubled. It's about $24 billion, I think. Maybe a little bit less. No, maybe more. Let me switch this real quick. 0.76 rupees to the dollar. About $24 billion market cap. Okay. Very impressive. I wonder why these businesses increase their revenues by 50%. The question I'd like to find out with these folks is it a new deal? Have they done an acquisition? Is this a merger between two companies? What are the exact details? Earnings were relatively flat. Expectations been priced in. Next one's 27th of July. Chart-wise, this is one of those where it just likes to remain in an uptrend. And you buy on any retest of this support level that's being formed. Interesting. That's JSW Steel Limited, another Indian equity. Let's move to LTI, Larsen & Toubro Infotech, a really huge business that I'm familiar with in India, but has consulting services, technology-related business, all sorts. Let's get an exact definition. Information technology services and solutions. They offer analytics and information management. Cloud as well. Indian cloud. That takes the interest of any international investor, that's for sure. Let's pull that up. And switch everything to, can I do that? Dollars, there we go. In 2019, they did 1.5 or so billion dollars. Recent year, 2020, $1.6 billion. Next year, they're expected to increase to almost $2 billion. Steady growth of income as well. In terms of its share price, it has doubled its shares when financials have only increased by about 20%. In terms of valuation, let's come up with something. A rough estimate. Let's see. This is just a rough estimate. Normally I'd model it, but I'm just curious on which ones I want to model in depth. It's quite fairly valued based off end of year. Let's do 729. See how that works. Roughly $10 billion. That's not bad at all. What a great mover. Some return you'd have got being a long-term investor for 3 years in Larsen & Toubro. Very interesting. You see, that's one I'd like to look at. Cloud exposure. And maybe look at the amount of exposure they have to that area. I believe these guys are more consulting than anything, but that's a good place to start. Shares right now are a little bit overvalued, but it's one of those where you have classic drawdowns and then you buy towards those third drawdown areas. So what's this? So I will go ahead and model these in my own time and then look really in depth. It's just out of curiosity, new idea. It's LTI, Larsons, and Tuber. Sounds like a very French name. Larsons and Tuber. Okay. I do like a cloud business. Dr. Reddy's Labs. Why is everything in India doing so well? I mean, across the world, if you look at any other market, you'll see that almost every other market is doing really well across the world. Developed market or not. It's very hard to find companies not doing well, except for overcooked tech stocks. And these are just reverting to fair value, should we say. From a Westerner's perspective, from folks who are in India's perspectives, the price to earnings multiples are going higher, or whatever, enterprise value over EBITDA, whatever you tend to use, is going to get a ton more expensive. So they'd probably be selling. But the reason why a lot of people are interested now is that the international market has now looked at some of these names, has access due to infrastructure being quite strong, and wants to figure out what is worth investing in themselves. Okay. How long do I have? 4 minutes till we have our call. Next one. Dr. Reddy's. Dr. Reddy's Laboratories. What does this business do? Probably pharmaceutical services, and drugs. Okay. I assume it's your classic growth business, lingering above those all-time highs. In terms of the chart, it looks quite healthy. Let's check the financials. This will probably be the last one we'll look at briefly. We'll do a more well-researched one, but this is just me casually looking through some of these names without any prior look. Let's see, revenue 2020, $2.5 or so billion, up to almost $3.2 billion. The expectation for the coming year, higher growth than ever before, but the year after, not so much growth is expected, maybe 4% growth in revenues. Profits, doing all right there. Best in history, but not by a far margin, with a third more revenue. Yeah, a third more revenue. A little bit more revenue the year after, a little bit, much more profits. Much stronger profitability is expected there. Let's see. I mean, it's not expensive. It's quite a volatile one by the looks here. It hasn't broken all-time highs. That explains it. Financials weren't perfect. Generally, fundamentals and technicals tend to work in hand. Man's rocking that TradingView Pro, you know, says Carbon Impulse. Yeah, of course, of course. We gotta do it, man. There's a lot of stuff to get through. I just like it, man. What is it? $60 a month to just have peace of mind every time you hop on charts. You put 8 charts. I'm using 2 screens. One there where you can see me looking at the camera, obviously without the glasses on. And then this one is the screen that I'm recording right now. Dr. Reddy's Labs, you know. I would look deeper at these guys in terms of recent quarterly reports, financials, all that stuff, and go from there. I would like to do that for the ones I tend to screen myself. Yeah, cash is good. Everything else. I like the look of these Indian companies because they seem to manage their financial position quite well. They don't get too over leveraged. And if the situation's right, their revenue growth can be sustained quite seriously. In terms of growth position, the only fear I have is the currency risk, which has never been stable in India, but it's never been serious. It's just when you compare the likes of India to the likes of China, China has that system in place, the dual currency, which can stabilize themselves. But when you look at India, there isn't anything stable there. With regards to politics, I have no understanding, but you could look at any country and say there's issues with their political situation, stability, whatever. In terms of the financials of their companies, they all seem to be quite interesting, at least from what we've looked at so far. I will end up looking through 100 of these briefly, as I'm doing now. Then once I've looked at 100 of them, I will dive deeper into the ones I like, spend weeks analyzing them, and then plan price targets and hold these until my initial thesis changes. It's kind of like you don't hold a position every single day. You only hold it until the reasoning for you buying it changes. That's the way to kind of make money on that rotation. Instead of making, say, 20% on one position, holding it for however long, you can end up making two ways. Situation changes drastically, you could change your position to a short, close your entire long, and open a partial short, or a whole short, whole size short, whatever. Or you could just close entirely, which is generally the majority of situations. Sometimes if you're unsure, what you can do is close a partial, hold the rest. If it's in an uptrend, but you do believe that the financial situation's changed, you don't want to risk getting out at the bottom. Close half your position, a quarter, a third, 2/5, whatever you desire, as long as it works in terms of fees. For those who have larger size positions, like myself, when I make a larger position on these kind of companies, I tend to slice. I tend to add in chunks as well. Hi, do you understand Persian? Says RSHORCH. Wow, it's funny you mentioned Adani Enterprises chart, Niti Sharma, because that's a company on my list. But I'll look at that before we go, because we were planning to go shortly anyways. RSHORCH. I hope I'm saying your name right. I do understand Persian, but I keep these streams English because everybody can understand them. Niti Sharma wants us to check that. Oh wait, the MACD confuses us. It is better to change the settings badly? I don't know what you mean. This is what I'm comfortable with. Let's go to the settings. 12, 26, and signal smoothing at 9. If you want to know what the MACD is, and it confuses you to a degree, then I will give you a video that we've made, a free video on our YouTube channel. Let me find that, where I explain exactly how the MACD works, in case you're curious. Maybe you can kind of see where we're coming from here, instead of me having to explain it entirely now. I'm just going to get that link, give that to you. I'll put up Adani Enterprises. I also need to know where I need to continue from, because I've got a work call in 26 minutes. I'm going to link the video real quick. Is this the MACD one? There we go. In this video we're going to be looking. I'm going to put that in the chat in case you want to check it out. RS Horsch. That's exactly why we use that and how it makes sense. How busy is my chart? Not busy at all. Ooh, what's happening with Adani Enterprises? Look at that candle. Open at 14.37. Go as low as 11.95 and be there. Not healthy. In terms of chart, yeah, but you just wonder why that happened. Anyone selling out? technicals wise as well. That could be the beginnings of a downtrend. Not sure. Let's have a look at their financials before we go though. Adani Enterprises. I see the name Adani everywhere. I wonder if it's got multiple businesses. Switch away from quarters to annuals. Revenues for 2019, $6.1 billion. 2020, $5.3 billion. Expectation is to increase almost 24% to $6.6 billion in 2021, the coming year. This growth will slow down to about 9% in the year after. In terms of net income, 50% higher than 2020, 20% higher than 2019, and in 2022 rather, profits will be 50% higher than in 2021. That's the estimation. In terms of free cash flow, they must be making a lot of investments because we see $1.5 billion just going out in terms of cash. I don't know why. Probably explains why they've had growth-like moves. Wow. What? From 250 rupees a share to this, pre-COVID to now. So if you got in at the lows in COVID, you'd have made 10x. A $2 billion business to a $22 billion business. India is special, man. You don't really see that much around here. RS Orch says, thanks, my name is Reza. Salam Reza. Chetori. I hope you're okay. Niti Sharma says, LMAO, a news broke 3 FPI's accounts frozen by SEBI. Wait, as in fraud, investigations, that kind of thing. There could be some form of manipulation to have this kind of magnificent rise when financials haven't really changed that much. I mean, compare it to the likes of the companies we mentioned earlier. I think LTI was a good one, Larsen and Toubro. Their price more natural, should we say. Fundamentals have changed to explain that, and they've adjusted. With regards to Adani Enterprises, not so much. I'm very surprised there. MACD price histogram, signal alone, its price. Perfect, perfect. Yeah. If you have a look on that video, I dive into it of exactly what we do. Feel free to choose whatever you're comfortable with, but that's up to you, you know. We backtest what we use, and that's why we keep with it. I wonder what will happen with Adani. I want to have a look at them, actually. You got me interested now. I'll look into them deep, and I'll run them through the quant model as well. Your EMA over MA looks like an alligator. That's a really creative mind, M-Flash. An alligator. Very artistic. You could be doing an NFT of a chart. If you and I work together, I know someone that can help us sell it. We can make a lot of money from that. Adani. Oh no. I got to keep track of the time because we were going to head off shortly. Adani. EMT. Okay, I'll properly dive into these another time, and I'll continue from Dr. Reddy's. And that is the 21st. 14th of June 2021. Okay. Well, folks, thank you for tuning in. This is a very brief stream. I hope everybody has a wonderful day. If you want to see exactly what we looked at, check the catch-up, which will be uploaded on TradingView and also YouTube as well. We were looking at a couple of Indian stocks briefly. Not really had a chance to look into these guys until now. What we have been focusing on in recent months has been the Chinese set of ADRs, the likes of JD, if you see here, or the likes of Alibaba, as you see here. All of these tend to stick to some form of range. We like to buy once either they break out or break down, assuming our fundamental thesis works with them. Also, financials, specifically European banks. This is just a favorite of mine to trade. We have a long position on L3 Harris. For those who follow our trading videos, this hasn't been posted yet, but if you've been following my Twitter, which I'll share my Twitter right now. Hold up. Boom. That's my Twitter. If you've been following my Twitter, you'll see live updates of what I'm thinking and trades that we may have placed. US market closed 11 minutes ago. It is 9 p.m. Well, 11 minutes past 9 p.m. in London, England right now. We're long these guys. We were long at 222, so it's about where we opened. We were long, and I think it went down to 216 or so. We were long on this break. And now there's just clarification. We're expecting probably as high as 228 to 240 as a range. We'll see how this plays out. Not expecting to get rid of it until at least before earnings. Then I would be curious about closing. Too much risk for an earnings play, but for now it's comfortable. We're looking at Pinduoduo as well. Don't like the financials on these guys. Everything looks ugly behind the scenes. We also uncovered Dada on Twitter before it moved up from, I think, was it 23 or something like that? Now all of a sudden it's $32. We also uncovered Huya, which closed quite well looking at the charts. It could end up running much higher. We'll end up buying at a break of, let's say, $17.55 and hold and see what happens. It's a high short float on these guys. That's not the reason why we bought. Fundamentals are just actually really good, and it's an industry where you can sleep and it makes money for you. Just maintain infrastructure. Essentially e-commerce, but not e-commerce, but it can expand to e-commerce. Streaming. Think of Twitch, but the Chinese equivalent of that. We would like it around 15.50, but in reality, whether or not the merger between them and Daoyu goes through, Huya is worth probably, in my opinion at least $20 a share. If not, outside of this merger situation, significantly higher. What do we have recently? $36 in that January, February rally across Chinese markets. I think it's probably fair to say they're worth just under 30 in a year, 2 years time. And so I'd like to be buying on strength. If that's not the case, I'd like to be buying around 15.50 or so. Don't know if I'm going to get it. Probably will last for a day if it happens, but we'll go for it. What else is there? Because I do have a meeting in 16 minutes to attend. I want to eat something real quick. Disney we were looking at, not an amazing play, but likely to hold this support around the 160s, as high as the 160 highs even. Maybe double bottom of 167, let's see. We're expecting it to go as high as 200 probably within a couple of months. That's probably it for now. There's still a battle between tech, kind of growth stocks, and financials, kind of value stocks, as we call them, coming into play right now. It'll be interesting to see what happens next. I'll dive a little bit deeper into some Indian plays myself and keep coverage on Twitter. The upcoming subscription with Quantum Research hasn't been released yet, but may be released in the coming weeks, coming months. Who knows? That will have a lot more details. But in the meantime, make sure you stay in touch with us on Twitter. I'm on Twitter at RyanKier2. And if we release any podcasts on the Quantum Research podcast, you'll see those as well. We did a one on Huya recently where we dive deep into their financials. We're working on releasing one in the coming weeks or so with a very, very amazing person who actually founded a business that was recently sold for over $5 billion US. Can't say any more details, but there's the teaser. An amazing person as well. So that will make for some good conversation. I've been Ryan Kia. This has been another live stream with Quantum Research. And as we always end the podcasts,